Hello viewers, this is Uddalok Chatterjee and I am back with yet another video on stock market. Today we would be talking about Russia-Ukraine war. I am making the video on the Friday and it was yesterday in the morning that the first news of bombing came when we had a crash of 2,500 points in Bank Nifty and about 1,000 points in Nifty, which has taken us back to the September levels for many of these stocks. The stocks which are trading now have come down to the respective levels that they were in September 2021. Now, coming to the impacts. Number one, it has resulted in a huge increase in crude oil prices in the international market, as on the closing of 24th February 2022, specifically yesterday, that is the Friday, crude oil were trading at $104 a barrel. We had a huge selling pressure that was witnessed across all sectors in the Indian market, both in the NSE and in the BSE. Stocks like HDFC Bank were trading at rupees 1420. Stocks like SBI were trading around 470, beaten down from 540 levels, beaten down 8%, 9%. Majority of the sector, majority of the financials of the investors looked in red. And now what we were up to is we were thinking of a recovery, and yes, God blessing, God willing, we have got the recovery of the market, at least 500-600 points in the Nifty and about 1,000 points in Bank Nifty. When a war of this nature happens, the first thing that people fear is maybe a large part of GDP will be deployed for military expenses. Maybe we will incur a huge inflation hit economy, an economy where crude oil prices, gas prices, where FMCG commodities are priced at a huge level, where the government fears a global collapse, a hitting down, a beaten down US market coupled with the Singapore market. Amidst the fear, what we suppose that there was a huge selling pressure across the sectors, though some sectors like fertilizer, for example, Deepak Fertilizer survived, State Bank, SBI, survived. Losses of these particular segments or certain companies or certain stocks were not more than 2% on that specific day. And now what we are exploring or we are seeing is a small recovery. So it is a very good time to pick up stocks of good valuation on dips from an investment as well as a trading point of view. Let us come to the main discussion. Coming to the first sector, and this is the oil and gas sector, refining and marketing. Our first company is Reliance Industries Limited. At the closing of Friday, the 25th of February, it is trading at 2284 rupees, 2284. It has neared the 1st September data. What we are seeing is that it has a major support at this level, and we will definitely explore for 2350 and higher levels from a trading perspective and 2400 plus from an investment perspective of a 1 year horizon. Coming to our number two, a peer of Reliance Industries Limited, it is the Indian Oil Corporation, which is trading around 112.35 rupees. The same data can be seen on September 7th to 8th. Indian Oil Corporation is also in a very good support zone, and you can think of buying these. I will recommend RIL and IOC in the oil and gas refinery segment for a trading as well as an investment purpose. Coming to the second sector, we would be seeing a good growth, and probably with Bank Nifty recovering around 1,000 points today. Private banks, ICICI Bank, which has not been hit that much by the Ukraine war news, the lowest that it touched was rupees 707. The same it was trading around December 6th and December 20th, 2021. The stock is presently trading at rupees 730. We would buy it for a target of around 800 plus. Number two is a public sector bank, and that is State Bank of India, our very favorite State Bank, trading at around 483. The minimum low that it got yesterday was rupees 473. It is still a buy recommendation. Below 500, buy State Bank. Just close your eyes and buy State Bank because it is a very good stock. And well, in a country like India, public sector bank of SBI with such a huge market cap and has such a huge trust of the ordinary people and investors will definitely show better results, and we can expect better quarterly results also. Now, coming to my third segment, and a very important segment as was portrayed in the budget, and a segment which has shown very positive vibes, especially after the 1st February budget, that is the diversity or diversified chemical segment. And we are having Tata Chemicals as a very important and big stock here. Rupees 826.40 it is trading at, and we would expect it to go across rupees 1000 in a couple of months time at least. Number 2 stock, PI Industries. If you open ticker tape, you will see 76% of the investors have given a buy on this. PI Industries trading at rupees 2478. We are very bullish on it, and personally my pick is PI Industries. I have invested in Tata Chemicals and PI Industries both, as well as in ICICI and SBI Bank. Viewers, you can also think about investing in these stocks at these specific levels. If you like my video, please do share and comment.